Imagine waking up one day, pouring your coffee or popping your Red Bull, it don't matter. And then you realize you don't have to go to work anymore. Not because you hit the lottery, but because your investments now pay you enough to cover your entire lifestyle. Sounds too good to be true? Well, let's talk about how the Charles Schwab U.S. Dividend Equity ETF, or SCHD, might be one of the best ways to turn that dream into reality. What's up, dreamers? I'm Zeke and welcome to the Dream Green Show. In today's video, I'm giving you a step-by-step plan on how to retire on SCHD dividend income. We're talking numbers, timelines, and realistic expectations. And by the end of this video, you'll know exactly how much to invest and how long it might take to make an early retirement a real option. So if you're serious about building financial freedom through dividends, grab your pen, grab your paper, hit that thumbs up button and subscribe, and then let's go ahead and dive straight into it. But first, dreamers, before we dive into it, right now inside the Patreon, I have 7 pro day traders in there inside the Lucid Dreamer role. They post their option trades every single day. Then I post every single time I buy and sell a stock. If you guys want to be a part of the Dream Team, we hold Zoom calls every single Sunday. You could join that. It's only 8 spots remaining because I want to keep it small in there so I could keep it very personal and answer everybody's questions. Inside the Dream Team, we're talking about the wheel strategy and how to create passive income from selling options. If you want to learn the wheel strategy, or if you want to be a part of the Lucid Dreamer role, consider joining the Patreon right now. That link is going to be down in the pinned comment section. All right, welcome back. First, why SCHD? SCHD is one of the most loved dividend ETFs on the market, and it's the most loved for a few good reasons. The first one is that it is packed with U.S. companies that have a proven history of strong financials and consistent dividend payouts. If we come over to Seeking Alpha, you guys can see that SCHD, we're going to look at their top holdings, and you guys can see that they're very diverse in each sector. And these are their top holdings. They have Chevron, ConocoPhillips, PepsiCo, which is a dividend king. So they're going to have a bunch of companies in here. Altria, also a dividend aristocrat, and they have a very high dividend yield. But right now they have 103 different companies that pay dividends inside of their portfolio that focus on dividend growth and growing that company. So SCHD usually performs pretty well in growth and dividend growth because they focus on having good growth dividend companies inside of their portfolio and keep it very diverse. The second reason is that it is low cost with an expense ratio of just 0.06%, which means that most of your money stays invested inside of SCHD and you're not paying too much on the expense ratio. And then the last reason, probably the most important, is that it currently holds a 3.5% dividend yield with a history of growing those dividends every single year. If we come over to this chart right here, you guys can see that they've been growing their dividends every single year for the last 13 years. And this is probably one of the most important factors right here, is that they've been growing at a 10.87% every single year. They've been growing their dividends and they have a dividend yield of 3.75%. And they pay out every single quarter. That means every 3 months you will receive a dividend payment from SCHD. That is the most passive form of income there is through dividends. You just invest inside a company and every quarter you receive a check from them. So now that you're getting your dividends, SCHD, they also rebalance their portfolio annually. They target high quality companies with solid returns on equity and consistent dividend growth. So you're not just buying the dividend yield, you're buying the strength of these companies. Now here's the question you guys are all asking: how much do you need to retire on SCHD? Well, let's break this down with some numbers. Say your goal is to retire and live off of $40,000 a year in dividend income. You already got your house paid off by the time you're ready to retire. You got your car paid off by the time you're ready to retire. You just need $40,000 a year to live off of in dividends. That's about the average income needed to cover your basic living expenses in many U.S. cities. So if SCHD, they have a dividend yield of 3.5%, you'll need about $1.15 million invested to generate that $40,000 in dividend income per year without selling a single share of SCHD. Now, I know what you're thinking. That's a huge number. Anything over $1 million is a huge number. Anything over a couple $100,000 is a huge number. But here's the thing: you don't need $1.15 million today. You don't. Thanks to compounding, dividend reinvestments, and growth, you could build towards that over time. Let me show you how. So one thing that I do is called dollar cost averaging. So I dollar cost into SCHD $25 every single day. Rain, sleet, snow, doesn't matter. I'm investing $25 inside of SCHD every single day. Why? Because I don't try to time the market. I buy the same amount on red days and on green days. Some days it feels like I'm buying the highs. Other days it feels like I'm getting a pretty good deal. But over time, it averages out beautifully. This removes the emotion from investing. It keeps me from panic selling during the dips or waiting on the sideline during the rallies. So let's assume that you're starting from $0 and you have nothing invested at all, but you could commit to putting away a couple of extra dollars per month inside of SCHD. Let's figure out exactly how much you need to put away. Okay, here we are on the dividend calculator. We already typed in SCHD. We're starting from nothing. Let's say we have one share. We have a 3.75% dividend yield. They grow their dividends every single year by 10.87%. And then SCHD is expected to grow by 10.2% every single year. Because if we look at the last 10 years of SCHD right here, go to the summary. Let's look at the last 10 years right there. Last 10 years, they're up 112%. So that's around 11.2% every single year for the last 10 years. And we're going to invest from 30 to the time we're ready to retire at the age of 60. So that's 30 years. So our annual contributions, how much do you need to retire? If you're just investing $1,000 per year inside of SCHD, hit calculate dividends, you'll end up over the last 30 years with a $377,000 portfolio, and you will be receiving $13,000 in dividends every single year. But I already ran the numbers, guys. You'll need around $3,100 in order to hit your $1 million goal. So let's hit calculate dividends. So if we invest $3,100 inside of SCHD every single year, we will have that $1.1 million portfolio, and we'll be bringing in $40,000 in dividends every single year. So let's run the numbers on that right quick. So $3,100, if you divide that by 365 days, that means you will only have to save, that's right, $8.50 per day. You guys can find $8.50. I see you spending on Coca-Cola and Starbucks every single day. You can find $8.50 per day. But let's just say that you don't want to do it per day. You just want to do it per market day. So let's see what that adds up to be. So $3,100 divided by 52 weeks. And then so that's $59. And then there's 5 trading days per week. So you will need to save $11.92. So let's just say $12. You'll need to save $12 every single market day, right? Monday through Friday, $12 every single market day in order to reach that $40,000 in dividends income, right? What we show right here, that $40,000 in dividend income, that's just from saving and investing $12 per day. And I know you guys can do it. So one of the key takeaways from that is that you don't have to worry about hitting the big home run. It's about being consistent. The earlier you start, the better your results will be. Because look, guys, let's just say if you started at age 30, you wanted to retire at 60, that's 30 years, you'll have $40,000 in dividend income. But let's just say you started at the age of 25 and you wanted to retire at 60. That gives you 5 more years. So you have 35 years of investing. Let's hit calculate dividends. Oh my goodness. You doubled your money because now you'll have a $2.2 million portfolio just from an extra 5 years of investing. And now you'll be bringing in close to $80,000 in dividend income. So you don't have to worry about hitting the home run. That's just from $12 a day, guys, $12 a day. And now after reinvesting your dividends, you'll start to hit your target at an accelerated rate from the compound interest effect. Now, here's a couple of key things that you need to do while you're building your portfolio. The first thing that you need to do is increase your income. The more you earn, the more you can invest. You should not be making the same amount of money from year 1 at investing, $12 a day, at year 10 of investing. If you could still only invest $12 a day at year 10, then you might need to start thinking about finding a new job. You should start to find ways to increase your salary at least every 5 years. So if you're working at a $30,000 job, your first year, 5 years down the line, you should at least be working at a $35,000 job or maybe a $40,000 job. So every 5 years, look to increase your income. That's the best way to up your investments is by having more income. The second thing, guys, this is key, is that you need to stay out of bad debt. High interest debt kills investing progress. Like credit card debt, any bad debt that interest rate is higher than what you're making from SCHD, it's going to kill your portfolio, right? It's going to kill everything. And then the third thing is that you need to take advantage of these tax advantage accounts, like your Roth IRAs, the traditional IRAs, your 401k, anything that gives you a competitive edge and some firepower that the government's not going to take from your tax, right? Because in some of these accounts, you're not going to get taxed from your profit. months. And then the last thing that you guys will do is track your progress. I use spreadsheets to watch my dividend income rise every single year, every single quarter. I use this one right here. If you guys want this spreadsheet, I've been tracking mine for years. My very first year of dividend investing, I made $164. My first month, I made 78 cents, to where my most recent month, I made around $464. So now I'm making more in 1 month right here that I made my entire first year of investing. This is my chart right here, and then my future projections. Once again, if you want this chart, it's inside of my Patreon. Go ahead and check that out. You can sign up, get it, and then leave the Patreon if you want to. But the least that you could do is hit that thumbs up button and hit that subscribe button. But back here, it's projected that I will reach my first $1,000 month on February 2028. So a little bit over 2.5 years from now, I will finally reach my first $1,000 month. So if you guys want that spreadsheet, it's inside the Patreon. What I've learned from the last 7 years of dividend investing is the mindset is what matters the most. So let's be real, building up a big portfolio enough to live off your dividends, it takes time. There will be months where the market drops. I've been through it. There will be times that you want to quit and you was like, it's not working, but you need to stay focused. Dividends are your snowball, all right? The further it rolls down the hill, the bigger the snowball gets. And then eventually that snowball gets so big, it could run right over a car, right? So reinvesting your income becomes more shares. More shares means more dividends. And eventually that income starts to feel like a paycheck to you. So I'm telling you, stick with the plan. And one day you'll wake up realizing that your money is working harder than you are. So can you really retire early on SCHD dividends? And yes, you can, but only if you start today. Stay consistent and think long term. This ETF isn't about chasing hype. It's about building a foundation. And if you lay down that foundation strong enough, it could support the retirement lifestyle that you dreamed about. So guys, if you do want a head start, I'm also going to leave a link to Moo down in the description, down in the pinned comment section. Right now, they're giving you up to 60 free shares just from signing up and using that platform. A long time ago, when I first started investing, I got 2 free shares from Robinhood and maybe 5 free shares from Webull. Now the game has changed. Now they're giving you up to 60 free shares just from signing up and using that platform. So that is an amazing way to get a great head start on your dividend investing journey. So if you found some value from this video, hit that like button, hit that thumbs up button, and subscribe to the Dream Green Show. If you want to see how I personally invest in SCHD and other dividend plays, join the Patreon where I break it down step by step. Until next time, guys, keep investing, keep dreaming. I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.
This video is for educational and entertainment purposes only. It does not constitute financial advice. All investments are risk. Do your research. This is not licensed financial advisor. Any third party considered false under the fair use commentary and analysis. Please consult with a licensed financial advisor or professional in your area before making investment decisions.